Good morning. Brian Hale here with Mortgage Advisory Partners. It's Monday, April 29th, coming to you with our weekly release of our newsletter every Monday morning to social media. The newsletter, the link to the newsletter, the link to subscribe to the newsletter, and the link to our website is above. You can take a look at that if you subscribe. And again, I always remind people every week it's free. We've had, again, immense demand for the subscriptions. Feel free to subscribe. And if you subscribe to the newsletter, you would actually get the newsletter on Friday morning so that you'd be prepared for your clients and customers over the weekend. But in any event, the link to the newsletter is above. We're going to have a really jam-packed data week this week, and that's really what the newsletter talks about. You can expect some tougher talk from the Fed after this past week's inflation data and economic data. Unfortunately, when we got the GDP report last week, GDP actually came in a little lower, a little less inflationary than economists and the analysts had expected. But the PCE data, which is the personal consumption expenditure data report that's part of the GDP report, actually came in materially hotter. They had expected it to come in at about 3.4%. It came in at 3.7%, which doesn't sound like a lot, but it was materially hotter than they had expected, than analysts had expected. And it suggested that we're nowhere near getting to the 2% inflation target that the Fed has set before they begin to reduce rates or see any rate decreases. The PCE data, actually the next day, the annual year-over-year data came out, and it wasn't nearly as hot. It was actually at 2.8, still higher than the Fed would want to see, but was at 2.8 as opposed to the 3.7 for the Q1 data for PCE. There's actually a couple of great charts in this week's newsletter. If you take a look at them, they kind of explain this phenomenon a little bit and explains what's really going on and shows you both the quarterly PCE data as well as the year-over-year PCE data along the way. This week's economic data as well is going to have pending home sales, and it's also going to have existing home sales as well as new home sales. New home sales are keeping up fairly well as compared to the existing numbers, and you can see that obviously in the strength of the home builders over this last few months and certainly the last quarter. This week's data is an immense data dump that you should really need to pay attention. On Monday, the U.S. Treasury will issue a quarterly update on the borrowing needs. In other words, what kind of additional debt does the government have to issue to essentially pay the government's bills? This has been a hot button for rates in the last few cycles, and given where interest rates are, we can expect significant increases, I suspect, in Treasury issuances to continue to fund the U.S. government. On Wednesday, we're going to get the Fed announcement on interest rates for this month at 2 p.m. Eastern. Experts tend to disagree on how much this will matter for rates, but at 2:30 we know that we're going to get the announcement, followed by the press conference by the Fed Chair Powell, and that's really where the market has a tendency to focus and hang on every word that he has. I'd encourage you to watch both the announcement at 2:30 Eastern on Wednesday, as well as the following press conference with Chairman Powell. In addition to that, we're going to get job openings announced on Wednesday as well, and those have remained strong. And then on Friday, of course, we're going to get the big monthly jobs report at 8:30 Eastern, which is, I think, going to set the tone a great deal for the balance, certainly of May and likely over the next couple of months. So again, Monday, we're going to get the Treasury refunding financing data. On Wednesday, we're going to get ADP jobs report, which is the private sector jobs report. It's expected to come in at about 179,000 new jobs as opposed to the 184 that was the print last month. We're going to get the JOLTS jobs openings, which is expected to come in at 8.68. The job openings are actually expected to come in slightly higher than last period at 8.75 million, so 8.68 million. Will actually be down compared to last month at 8.75. So fewer job openings are expected. We're going to get the interest rate decision at 2 on Wednesday as well, which is expected. The Fed's expected to hold inflation or hold rates where they are, followed at 2:30 p.m. Eastern by the Fed press conference. On Thursday, we're going to get jobless claims which are expected to be at 212,000, slightly higher than last month's 207,000. And then again, we're expected on Friday to get the non-farm job payroll increase number expected to be at about 243,000 compared to 303,000 last month. So a jam-packed week that's likely going to have material impact on rates this week. We could be jumping all over the place, or if those numbers come in hotter than expected, we can expect material increases in interest rates. As I mentioned, our link above to our website, and we've also got the link to something known as the Weekly Roadmap. This is an exciting new announcement that we're going to be talking about over the next about 4 or 5 weeks before we launch this. This is going to be a weekly version of this conversation for an hour, including guest speakers, information, speakers from Wall Street, speakers from around the industry, speakers that are top producers in the industry. There's a lot more of that to come, but if you go up to the link in this post on social media, you can get some additional information. And if you're interested, you can begin to leave your information and we'll come back to you. We're very excited about what we're doing with the Weekly Roadmap. And more to come on that piece. So, a jam-packed week with data. You need to read the newsletter above and take a look at what's going on and what you can expect so that you can properly consult with your clients as well as your customers this week. And I'll be back throughout the course of this week with updates on each of these data points as they get announced. We'll be publishing them here, and if you're a subscriber to the newsletter, we'll be sending them to you directly through the balance of this week. So again, I wish you the best week. I wish you continued success here this year and look forward to talking to you again soon.